Hello, 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 everyone. Welcome to our monthly October workshop. I'm very excited for this today. I just want to give it a second, make sure folks can join us live. For everyone watching, if you are watching live, feel free to post in the comments. I'm just going to check over here, make sure that everything looks good. So streaming over here on Facebook in our Facebook group, as well as on our brand new YouTube channel. I'm going to talk about that really quickly. And actually, you know what? I'm not going to do that. I'm going to do that as a separate video. So for, I see a couple of people watching live. For anyone watching live, we've had a few changes in the membership, which I do want to talk about, but I will do those on a separate live because I don't want to confuse our workshop participants. So bear with me one second. What am I doing here? I am checking to make sure that y'all can see me. Hold on. See me and hear me. I always just like to check because we had that one scare last month where I talked for an hour and no one heard me. So, okay, everything looks really good. I think we're going to go ahead and get started. So today we are, excuse me, today we are talking about our Q4 financial to-dos. And I thought this was a good workshop for us to do because, believe it or not, we are coming up on the end of 2020, which I know feels very crazy and overwhelming. But this is Q4, right? So this is the fourth quarter, October, November, December. And in any year, I feel like it's always, you know, there's like a lot going on, and I feel like the sort of prepping for the next year and kind of wrapping up the current year is something that sort of gets pushed off a lot. But I think especially this year, that's going to happen because I think October came out of nowhere. It's been a very jarring year that's thrown off a lot of people. And so I really want to kind of bring us back, refocus us. We are in Q4. We've got some things we got to do in Q4 to make sure that going into 2021, our businesses are in really good shape. And, you know, for anyone who's watching this, if you're watching this in the future, you're watching this in, you know, Q4 of 2021 going into 2022, this is all still very applicable. This is not time specific. And even though I've said Q4, a lot of this stuff is actually stuff you should be doing every quarter. So if you're seeing this and thinking, well, I'm in Q1 or 2 or 3, still watch it. I think you're going to find a lot of this really valuable. All right, we're going to go ahead and dive in. If you have any questions, please feel free to put them in the comments and I will answer them as we go or at the end. So let me just get myself set up here. Okay, so Q4 financial to-dos. So I wanted to just talk a little bit about why this even matters to kind of take a step, take a pause, and be thinking about what we should be doing in Q4 as it pertains to the money in our business. So the first thing, and you've heard me probably say this a million times, is that it is important to check in on our business financials on a regular basis. Now, I actually want you doing this more often than every quarter or once a quarter. But I also want you doing it certainly on a quarterly basis. And so, you know, we talk a lot about the concept of money meetings, right? And I'm a huge proponent of doing them twice a month. I recommend the 15th and the 30th. I think that's a good time to do them. And so that's really important. But I also like to schedule once a quarter, a quarterly review. And so I'll usually do this, you know, within 15 days after the end of the quarter. So if the third quarter ended September 30th, I would generally try to do this by October 15th. Now, what I will typically do is I will actually tack it on to my existing money meeting. So if I have my money meeting scheduled for October 15th for, let's just say, an hour, I might go ahead and reserve that whole morning and just so add on a few hours and then plan to do my quarterly review then. And that way I'm kind of in the right frame of mind. I'm not having to, you know, I'm not sort of losing focus because I'm doing it at multiple points in the week. But I'm definitely putting aside some extra time so that I make sure I can cover everything we're going to talk about today. It's also important, especially in Q4, but in every quarter, to do this financial review so that you can prepare for the upcoming tax season. And I actually hate this term, tax season. Yeah, I know I use it, but I hate it. Because tax season to me implies that you only really have to worry about your taxes one time a year. And so when we say tax season, most people are referring to April when people file their individual tax returns, at least here in the US. But really taxes is an ongoing thing, right? But when I'm saying this here, what I'm really talking about is preparing so that when you go to file your taxes in April of 2021 for the 2020 tax year, that you'll have everything you need. And if this is your first year in business, or for whatever reason, your first year kind of dealing with the tax stuff, even though, yes, you have until April, it's really important that you get your documentation and all of your numbers in order, really kind of by the end of the year. One, because depending on if you're working with a CPA or not, you want to make sure you leave plenty of time to actually get your taxes prepared. But two, there are also some requirements for tax filings you have to do before April. So in January and February, we're going to talk about those at the end of this workshop. So it's important to start thinking about it now, even though April is 6 months away. Excuse me. And the last reason why this stuff matters, why we should be focusing on this in Q4, is so that we can make adjustments before the year end, so that we can prepare for next year. So sometimes those adjustments are going to be in our processes or our systems. Sometimes they're actually going to be in how we've categorized things. For example, in our accounting records. Sometimes it's going to be expenses or revenues. Maybe it's collecting on invoices that are outstanding, or it's paying bills that are outstanding. So it's wanting to make sure we're really on top of everything so that we can get everything done that we want to get done in this quarter. And that in turn, a lot of those things I mentioned will help us save money or save money on taxes. Okay. All right. So the next, sorry, not the next. I just had a brain fart there. Bear with me. The first thing we're going to do in our Q4 financial to-dos checklist is to actually clean up and organize. And by the way, at the end of this workshop, I'm going to show you a bit of a timeline for how I do the year end. But I do just want to clarify, I know I said a few minutes ago that what I'm teaching you right now really can be applied to any quarter, and that's definitely true. But in Q4, we're going to go deeper into all of these things because we have more transactions. We've had more of the year. So potentially more we have to look at or more we have to handle. And also because it's the last quarter of the year, we want to make sure we really take care of everything and leave nothing outstanding. So that first step is cleaning up and organizing. So the first thing we're going to do there is making sure our books, our accounting records are in order and they're up to date. So this means going into your accounting system and looking to make sure that all of your transactions have been categorized correctly, that everything is synced correctly, that if you're reconciling between your accounting records and your bank statements, that you've done that's up to date. So it's basically just making sure that the data in your accounting system, in your accounting records, is accurate, is up to date, and you're basically good to go. And again, that's something that's good to do every quarter, but especially in Q4, because as we come up on April and needing to pay taxes, we really want to make sure that information is correct. It's also a good time to ensure that you have receipts for everything. Now, there are some rules. They generally say if it's $25 or more, that's when you need a receipt. I'm a big fan of saving receipts for everything. I think it's just easier to have one rule regardless of the amount. And if it's something I've purchased, I've got a receipt for it. So I do this in a couple of ways. The first is that I do something I call a download day. Now, a download day isn't really a full day. It usually only takes me about an hour max, but I do this once a quarter. So this is part of my quarterly review. And I actually said an hour. Honestly, it's more like 20, 30 minutes max. And what it essentially is I basically log into every account I have: Kajabi, ConvertKit, Showit, which is my website. Trying to think what else, StreamYard, Easy Webinar, all of my kind of regular accounts. I log into those and I pull or I download the invoices from the last 3 months. As long as I'm doing it every quarter, I'm pulling the last 3 months. And then I actually put them into a permanent file on my cloud drive so that I have them. Now, I don't worry about uploading them into my accounting system. That's an extra step that certainly would be nice and would make it easier to link the transaction with the receipt, but it's an extra step I don't need to do. I know I've got them in a folder safe on the cloud so that if I ever got audited and I needed to show proof of that expense, I can just easily go to that cloud drive and boom, I've got that receipt. But I do that once a quarter because that way, instead of doing it every single time I get charged, so, oh, I just got charged for easy webinar, let me download it and, go to the website and download it and then save it. That would probably take me 10 minutes to do each one. It's much more efficient to just sit down and do them all at once. And so that's what I do. So that's the first thing. For receipts that aren't online receipts, things that I can go to a website and download. So I go to Staples and I get a receipt, let's just say paper receipt. Those I actually have an app on my phone. I use Wave apps for my accounting system, and there's an app called, I think it's Receipts by Wave Apps or Wave Receipts, something like that. And so actually whenever I get a receipt, this isn't something I do every quarter, this is just, I do it on the go. Whenever I get a receipt, I open the app, I take a picture, and it immediately syncs to my system. So generally by the end of the quarter, when I'm doing this quarterly review, I don't usually have any of those paper receipts I have to deal with because I've already saved them. But this would be a good time, if you're not doing that on the go, it would be a good time to do that now. And then the other thing I like to do is follow up on outstanding invoices, meaning money that people owe me. So this is when I go into my accounting system. Now, my accounting system automatically follows up with people, automatically sends emails, but every once in a while, even with multiple emails, somebody won't pay. So this is where I'm going in and I'm following up and making sure that we get paid for everything that we've invoiced for. Excuse me. So the second thing that we do when we do this Q4 financial review is to do a few things so that we can end the year on a strong note. Now, the first thing I like to do here is to actually review the budget for the remaining quarter. So this is what I've budgeted for the remaining quarter, and I like to make adjustments at this point if year to date I'm not in line to hit my financial goals. This is when I like to look at that budget for the remaining quarter and see if I need to make any adjustments and what kind of adjustments and what do I need to put into place so that I can, in fact, hit those financial goals. I also like to review my cash flow for the remaining quarter. Same concept. It's, am I in a good position? Do I have enough cash to kind of get through the next 3 months? Are there any expected shortfalls? Are there any expected investments that I want to make? I need to make sure I have the cash for. Now, if you've watched, if you've been paying attention to the membership, you've watched the other videos, you know that reviewing the budget and reviewing the cash flow, these are things that you should be doing on a regular basis anyway during your money meetings. So this may not actually take you any more time. But what I do suggest is just kind of paying a little bit closer attention. When we're doing this for the money meetings, usually what we're doing is just kind of giving this stuff a quick glance. Like, are we on track? Do we have any issues? Okay, no, we're good. Cool, let's move on. Now that we're doing it as part of our Q4 financial review, I really want you to look at the next 3 months and really say, is this really what I want to do with the money in my business? Am I using it in the best way possible? It really kind of spending a little bit more time just laser focusing in to make sure that you're going to be able to end the year strong and hit your financial goals. And then the last check mark I have there is check on your progress to achieve those financial goals. And again, that's kind of what I've been talking about, right? Is looking at, remember, when I describe the budget, I always describe it as your roadmap for achieving your financial goals, right? So the budget is not an exam. It's not a test to see how good or bad you are. It's just a roadmap. And if you hit a point where you went off budget, maybe you earned less than you expected, or maybe you spent more than you expected, so you've gone off budget, it really just means you're off the roadmap a little bit, right? You can still get to your final destination. You just got to figure out a different way to go. And that might mean figuring out how to bring more money in over here. It might mean figuring out how to reduce your expenses over here. So what we're doing here is we're reviewing the budget, reviewing the cash flow for the rest of the year, and then really looking to say, based on where we're at right now, are we still on track to hit those financial goals? What does the roadmap look like for us to get there? Did it change? It may have changed. Let's make sure we understand how it changed. And what do we need to do or what do we need to put into place so that we can finish strong and hit those goals? Cool? All right. So the third thing we're going to do, hold on, is review the past year, meaning the year we're in. So we're in October of 2020 right now. So I'm talking about January through October, this current year we're in. So now we're going to look at the monthly budget to actual. So if you use my budget tracker, you in theory have been tracking, budget column and actual column and the difference, right? So as part of this Q4 financial review, one of the things you're going to do is you're going to go back and you're going to look at every single month and you're going to say, how did we actually do versus how did we budget? And again, this is not a judgment thing. This is to just understand where we went off that roadmap. So you may go back and actually, let me back up a second. The reason I want you to now do this and look at every single month is because it'll help you understand and notice patterns that you may not have otherwise noticed. So for example, when you do your regular money meetings, this is one of those things that in theory you're doing, right? You're looking at, what I tell you to do in money meetings is to look at the current month's budget to actual, and then also to compare the current month to the prior month and the current month to that same month a year ago, right? But what I don't have you do is I don't have you look at the budget to actual for every month so far this year. And the reason I don't have you do that is because that's a lot of extra work. But the reason why it's good to do that on a quarterly basis is because it'll help you notice those patterns. So for example, let's just say that in 1 month, you end up spending, I'm trying to think of an example. You end up spending, let's say your VA, it doesn't work on a set number of hours, but works on a project basis. So let's just say this month you ended up spending $1,000 extra on your VA, okay? Now in your money meeting, you might look at that and say, okay, that, we went over budget there, but it was probably a one-time thing. We had that bigger project this month and not gonna worry about it. Well, now when you're in Q4 and you're doing that financial review, you're going to look at all of the months of the year, right, so far. And so now you might notice, actually, we went over budget paying our VA 3 months in a row or 4 months in a row, whatever it may be. And so now all of a sudden it's, well, maybe that wasn't a one-time thing. Maybe we actually need to budget more for our VA because we're utilizing this person more than we expected. Or maybe it's, we didn't budget that much for the VA because we didn't think that it would take that person that long to do these projects. Maybe we need to look into that. So, a few possible reasons. And again, none of them are judgments or none of them are to say like we did something wrong, but it helps you point out, something we put in our roadmap, something that was part of our plan hasn't ended up being the case. So now how do we need to adjust it so that moving forward, it more accurately reflects the situation? Okay, so that would be an example of why we would look at every single month's budget to actual to start to notice those patterns. We're also going to review our cash flow for the past year for the exact same reason. Hey, every month around the 15th or the 14th of the month, we get really, really tight. Maybe that's because you actually get paid by your clients on the 15th and the 30th. So, maybe the kind of, and maybe all your bills go out the 1st through the 10th. So maybe the 11th or the 11th through the 14th are really tight because you haven't gotten a lot of your revenues in yet, but a lot of your bills have been paid. Again, it doesn't mean that you're doing anything wrong, but it's important to understand that. Because maybe as you're working on your cash flow for the future, see if you can adjust some of those expenses. So again, in our money meetings, we're looking at kind of just the 1 month, or with cash flow, I always tell you to look 3 months ahead, but we're never really looking too far back. That's what we're doing here at our Q4 financial review, is now we're going back and looking to see if we can find patterns so that we can make adjustments in our projections and our trackers moving forward. And then the last thing to review the past year is to review the profit calculations. And again, if you use my profit calculator, this is pretty easy to do. But this is basically going back and saying, well, what do our profits look like? And I always recommend you do this for the year in total. So where's our profit for the year in total, but also for each offer. So if you have multiple offers, I have a course and I have a membership. So I always look at my profit for each separately because I want to know if my course only gives me a 20% profit margin, but I'm just making this up, but my membership has an 80% profit margin. So let's remember, profit margin is how much of what you take in is profit. So essentially what I'd be saying there is, if I make $100 if I bring in $100 for my course, a 20% profit margin would mean that $80 of that 100 goes to cover expenses. The 20 is what I get to keep. Over here with my membership, same $100 coming in, an 80% profit margin means that it costs $20 to essentially sell my course. $80 is what I get to keep. If that's the case, if that's the reality of my situation, I'm going to spend a lot more time and put a lot more money into my membership because I'm getting a bigger bang for my buck. For every dollar I bring in, I'm keeping 80 cents, sorry. So that's important to me. So that's why I want to look at my profit calculations, not just for the year, am I profitable, but also for each offer. The other reason this is important is I've actually seen people who will just look at their profits for the month or for the year and don't actually realize that some of their offers are actually losing them money or breaking even. So it's really important that you think about, what am I actually getting for this particular thing? What is the ROI, return on investment? Am I getting good bang for my buck? Okay, so let's move on. So once we've reviewed last year, then we can prepare for next year. And this is a big part of the Q4. So this is not something you're doing in other quarters. This is where we start to diverge. And actually, let me go back real fast. Again, for anyone who's watching this and we're not in Q4, if you're trying to apply this to other quarters, this reviewing the past year is absolutely something you can do in other quarters. Just understand that you're going to probably spend less time doing this in Q1, Q2, and Q3 because you have less data to look back on, right? Now, you could, in theory, do a rolling review, meaning if it's the end of Q2, you could actually go back 4 quarters and look at Q3 and Q4 of last year and Q1 and Q2 of this year. So if you wanted to do that to kind of have a full year of data, you absolutely could. But I do want to point that out, that everything I've been talking about so far is absolutely something you can do in a quarter other than Q4. But just know that for some of these things, you're really going to dive in when you get to Q4. Okay, so preparing for next year, this is the one thing that you're only going to do in Q4, not in the other quarters. The first thing is we want to get that budget created. And again, I've got the budget tracker. It's in the, should be in the membership. In fact, actually on that note, for anyone who's watching this live or shortly thereafter, we are actually doing a total revamp of not the cash flow is staying the same, but the budget tracker, the profit calculator, and the quarterly taxes calculator. All 3 of those tools are getting a complete overhaul. So by all means, feel free to download the ones that are in the membership now, but we will be uploading newer versions. They work better, they're updated. We'll be putting those in certainly by the end of October, most likely much, much sooner, but I can guarantee by the end of October. So look for those. But the first thing to do to prepare for next year is to create that budget for next year. And again, I've got my budget template. You don't have to use it, but it's an option for you. And when we're doing this, we're really looking at a couple of things. We're looking at, number one, what are we trying to hit next year? What are our financial goals? And actually, that's the 3rd check mark down here. It really should be maybe the 1st check mark, is actually, what are our financial goals for next year? Let's get those laid out. I want to make $200,000 in revenues or profits, or what, decide kind of what your numbers are. I want to, and it's not just financial goals. I know I've said financial here, but it's also where you want your business to grow to. So if you take on one-on-one clients and you have had 2 clients a month, maybe it's saying, I want to grow to 4 clients a month. So maybe it's less about the revenue or profit goals and more about the number of clients or the growth level. So factoring those in too is really important, and make sure you're laying those out as well. But once you lay out those financial goals, then you'll go to that budget. And again, your budget is your roadmap. So, hey, I want to make, $200,000 in revenues this year. What is my roadmap to get there? How am I is it going to be through my course, through my membership, through my one-on-one? Like, what am I going to do in what months? When I do my budget, in fact, I've already started my budget for 2021. I haven't finished it, but I live by the beach, so in New England. So in the summer, I like to spend a lot of time at the beach with my family during the week, when I might normally be working. And so for me, I don't take on a lot of one-on-one clients, but I take on a few. And so for me, I actually wipe those out in June, July, and August, because I just know that I'm not going to take on any new clients then, because I don't want to have that extra workload when I'm trying to spend time with my family. So that's something I budget into my roadmap, and it affects, my other months. I make up for it in my other months. So keeping things like that in mind. You're also going to be looking at what you've done this year. That's why we did the review of this past year. Where are you now, and where do you want to go? If you made, if you did 100,000 in revenues this year, it's probably unrealistic to say you're going to do 10 million of revenues next year. I mean, it's not impossible, but it's probably unrealistic. So that's why it's important to know this year's numbers, so that you kind of understand where you're starting from in determining where you want to get to. Now, the caveat there is don't shortchange yourself. Don't say, well, I did 100,000 in revenues this year, so I'm going to put 100,000 next year. Like, no, plan for growth, but plan for realistic growth. So that's the first thing. The second thing is develop your long-term cash flow. And when I say long-term cash flow, every business means this in a different way. I'm really talking about for the next year. So if you're doing this in Q4 of 2020, I'm talking about your cash flow for 2021. Now, this should be fairly simple once you've created your budget, because you're going to take your cash flow at the end of Q4 of 2020, your bank balance, and you're just basically going to take your budgeted numbers. We think we're going to get X in revenues and Y in expenses, and you're going to add that into your cash flow tracker. Now, you're going to have to make some guesses, some guesses about when those revenues are going to come in during the month. If you are looking at the cash flow tracker, if you've looked at it, you may know there are two options. There's a daily cash flow tracker, which is what I recommend you use for managing your cash flow throughout the year. But there's also an annual cash flow tracker, which basically just shows you the cash flow every month. The downside to that one is it doesn't account for the fact that cash can come in inconsistently throughout the month. So you could have positive cash flow for the month, but in reality, if you pay all your bills at the beginning and you get all your revenues at the end, you might not be positive at certain points during the month. So that's why I don't love the annual, the monthly cash flow tracker for kind of a day-to-day management. But for this purpose, use that monthly and drop in those budgeted numbers. We think we're going to bring in X, we're going to spend Y, and that's going to give us, Z left over in cash, right? So that's a good place to do that long-term cash flow. So again, you don't need to worry so much about the day-to-day when we're looking at the 12 months. Because again, remember, if you're following what I teach, and you're doing your cash flow at your semi-monthly money meetings, you're doing a rolling 3 months using that daily tracker. So you'll have the more detailed, more specific numbers for the next 3 months. But for this purpose, where we're really just trying to get a sense of what the next year is going to look like, it's perfectly fine to use that monthly cash flow tracker. And then we already talked about laying out the financial goals. Cool. All right. Feel free to drop questions if anyone has questions in the comments. Otherwise, I am going to keep going. Okay, so now let's talk about tax prep. This is another one that is a bit more specific to Q4. Certainly, some of this might be something you would do in other quarters, but this is definitely very applicable to Q4. The first is to prepare, and that actually should say, prepare for 1099s, excuse me. So Form 1099 is a form that essentially needs to be filed with the IRS that reflects the amount of money that you have paid to other businesses. And we're going to go into details, so I'm just going to leave it there for right now. But you want to get ready for those. Now, those are due. The first deadline isn't January 31st. So, but I tend to find, frankly, that if you don't start prepping for these before the holidays, it gets really hard in December to get any of the information you need for these. And then all of a sudden it's January and you're scrambling because you do need to make sure you have information on the people you paid on file so that you can prepare these forms. So I like to start emailing people about this in like October. It may sound silly, but again, with Thanksgiving, with Christmas, with New Year's, it's a lot to try to get people to focus. So I will start emailing people for any outdated information or missing information in October for my 1099s. And again, we'll dive into details about that on the next slide. I also like to, during Q4, run a preliminary tax calculation of what I think I'm going to owe, or not even, what I think I'm going to owe, not necessarily that I have to pay, but what I'm going to owe, what my tax liability is going to be when I file in April. And then consider any tax saving opportunities. So do I want to, I'm a cash basis taxpayer, meaning that I can deduct expenses when I physically pay the cash for them. So are there bills that are coming up due in January that I can actually pay in December to accelerate that deduction? In terms of, revenues, are there revenues that maybe, they're due right around the end of the year, and maybe I say I'm actually going to push getting that payment until January 1st so that I don't have to pay taxes on that for a whole nother year. So thinking about some of those tax saving opportunities and just getting a sense for where you're at with your tax liability, so you can get a sense for, how much money you've already paid in, how much you might have left in a tax savings account, and if you're going to owe anything come April. So it's really just kind of starting that process. Excuse me. And then doing a quarterly tax catch up. So what I mean by this is, if you haven't been paying in quarterly taxes, or if you have, but you maybe underestimated in one or several of the quarters, doing a catch up. So doing that calculation to see, do I need to pay in a little bit more this quarter to make up for the fact that I didn't pay in or didn't pay in enough in the prior quarters? Okay, so let's do a quick 1099 overview. This is, again, not supposed to be a huge tax workshop or anything, but I do want to touch on this because this is one of those things that we do need to start, thinking about when we're in Q4. And I'm going to actually look over here. I apologize, just because my bigger slides are over here, and this is small right ahead of me, and I want to be able to see, so I can see better over here. So the general rule for 1099s is that you have to issue a Form 1099 to every person whom you've paid at least $600 to over the course of the year. If you've paid them for rents, services, prizes and awards, or other income payments. So the key is that you've paid them for an income purpose, right? Now, this is only payments that you've made in the course of your business. So we're not over here talking about, I'm trying to think of a good example, but like your landlord that you paid rent to, you don't have to issue them a 1099. This is just for payments made in the course of doing your business, okay? Now, and that actually is the second bullet right there. You do not need to issue 1099s for personal purposes. You are only required to issue a 1099 if the money was paid to an individual, a partnership, an LLC, an LP, or an estate. So if you have a graphic designer who is a sole proprietor, you've got to give them a 1099, assuming you paid them over $600. If you have a social media coordinator, again, you've paid them over $600, you need to issue them a 1099. It doesn't matter what legal entity they have, with the exception of a corporation, as long as they are an individual, a partnership, an LLC, an LP, or an estate, and you paid them over $600 for work in the course of business, okay? Now, in order to file the 1099, you need what's called a W-9. This is a form that they give you, and it basically has their name, their social security number, or their EIN, employer identification number, address, and a few other pieces of information on there. And so this is something that whenever I bring someone new on board, this is something I ask them for, is this W-9. Even if I'm not sure that I'm going to go over $600, I will typically ask for this before I ever pay them, because that is the best time, the time that I'm most likely to actually get the form I need is when they want their money. It's a lot harder if you paid somebody some money in January, and you paid them $200 in January, you didn't get a W-9 because you didn't think you were going to end up needing to 1099 them. But then all of a sudden in March, you paid them, $500. So now you've actually paid them $600 or more. So now you do need to file a 1099 for them. But that was back in March, and now it's, October, and you go to them and, whoops, all of a sudden their email doesn't work, or they're not responding, or whatever. It's really tough at that point to get that, it can be really tough at that point to get the information. So that's why I like to get the Form W-9 up front. But worst case, if you didn't, you can certainly go back. And that's why I said start in October, right? Start now before the holidays, before people get super busy, and ask them for that now. It gives them time to look at the form, figure it out if they're not sure how to answer it. It gives you time to go back and forth with them and have it with plenty of time to get your 1099s prepared. You will incur penalties if you don't file 1099. So it is really important that you do, in fact, file them if you are required to. So this is an important thing. I do want to point that out. Okay, so there are a few exceptions to filing. Sorry, I'm watching because there's someone pulling into my driveway. So I'm what is going on outside? And I don't know who this person is. but they're acting a little suspicious. So I'm being diligent, but okay, perfect. They're leaving. There are some exceptions to filing. So payments made to a corporation. So for example, let's go back to this list. Again, you only need to file 1099s if they are an individual, a partnership, an LLC, an LP, or an estate. So if they're a corporation, you do not need to file a 1099 for them. You also do not need to file 1099s for payments that you made to sellers of merchandise, freight, storage, or other similar items. So for example, if I bought, like if I went to Staples and bought a ton of paper, well, Staples may be a corporation, but let's assume Staples was an LLC. If I go to Staples and buy a ton of paper, I don't need to issue that. You know, I buy $1,000 worth of paper, I don't need to issue them a 1099. It was a purchase. They are a seller of merchandise. I was purchasing goods from them. And then this last exception is actually one that a lot of people don't realize, and and even people who do, I think it gets very confused. It's payments made through third-party processors. So for example, credit cards or PayPal. And this one's a very weird little loophole to the 1099 thing. So essentially what the rule says is that if you use a third-party payment processor, and literally paying with a credit card, I'm like, where's my credit card? Literally paying with a credit card would count. If you use a third-party payment processor, then you are not responsible for filing the Form 1099. That third-party payment processor is. But here's where it gets tricky. The rules for when the third-party payment processor has to file a 1099 are different than the rules for when you have to file one. So for them, it's not just that $600 rule. And in fact, I actually forget the exact number, but it's something like 200 transactions, and I forget what the dollar amount is. So it's a different threshold. So what ends up happening is, let's just say you pay your social media manager through PayPal, okay? You pay your social media manager through PayPal, you pay her $500 a month. So you've definitely exceeded the $600 mark. But you know this rule, so you say, okay, I don't need to file a Form 1099. PayPal will do it. Well, you get a call from her in January or February, and she says, hey, where's my 1099? And you say, well, I don't need to file one because the rule says that I don't have to if I pay through a third party, which I did. And she says, well, but I haven't gotten a 1099 from PayPal. Well, that may be true because, again, the requirements for a third party to issue a 1099 are higher than the requirements for an individual like me, or company like me. So that person may actually never end up getting a 1099 from anyone. And this can be very confusing for people. I actually had somebody asked me about this last year, and she said, well, so I just don't get a 1099 at all. And I said, well, yeah, that it's kind of this weird loophole. And she said, well, how am I supposed to know how much to put on my taxes then? And this is what I just want to make very clear, and in case you get this question too. The 1099 is reporting to the IRS what you've been paid so that they can essentially check to make sure that you are paying taxes on that amount. But the 1099 should never be used as your sole reporting of what you made from a company, right? That should be in your accounting system. You should be tracking that on your own, which is essentially what I told this person. So just note that this is an exception. It's kind of a funny exception. It's an exception that confuses people. I will also say this, on occasion, and I haven't done this every year, but on occasion, I will still go ahead and file a 1099. There is nothing bad other than extra paperwork for the IRS. There's nothing bad in filing a 1099, for payments that you have made through a third party, even if that third party ends up filing a 1099 as well. There's nothing wrong with that. And so oftentimes if I'm not totally sure, or I'm just kind of uneasy, I will still go ahead and file those 1099s anyway. It doesn't take me a lot of extra work. It doesn't cost me, usually much, if anything, extra. And it gives me peace of mind that even though I'm very confident in this loophole and I'm not worried that it's an issue, it just gives me that peace of mind that I'm doing, that I'm covered if for any reason it was determined that I should have filed it otherwise. Okay, so that's a business decision for you to make. I'm not saying that you have to. This exception, is clear. It's in the rules, but sometimes it makes people nervous. So you're certainly welcome to still file if you'd like. Now, the deadlines for filing 1099, hold on, I need water. January 31st is when you actually need to send the 1099 to the people you paid. So when I say vendors, that's what I'm talking about. So to the social media manager, to the graphic designer, whomever it is, you send the 1099 to them by January 31st. You actually have until February 28th to send it to the IRS. And what you actually send the IRS is not the Form 1099. It's actually Form 1096, which essentially summarizes your 1099. So you kind of send them this sort of simplified form that summarizes it. 1096, that goes to the IRS. I do want to note here, excuse me, that if you are working with an accountant who is e-filing your tax returns, they actually have, I believe it's until March 31st to e-file your 1096, but that's something they have to do for you, not you. So just be aware of, if you are personally sending the 1096 in, you have until February 28th. And do note, we're talking about the IRS here. You may also have to file with your state. So some places have state filing requirements as well. There is a great service, and I'm gonna actually pull it up right now. And actually, there's a few of them. But the one I use is one called Tax 1099, and I'll go ahead and drop this in the comments. And let me actually just pull this banner up here for anyone who wants to see this real fast. So tax1099.com is a great resource if you don't want to just fill out a paper form and mail it in. If you actually want to, excuse me, to have these filed electronically. And they basically, I want to say it's like $15 per 1099. So it's not free, but it's also not super expensive. Oh, I'm sorry. I actually totally lied. The first 10 forms are $2.90 per form. That's actually cheaper. So I'm actually now wondering if they've changed their pricing model. And maybe they actually have, maybe there's like a base fee or something, because I thought last year it was $15. But anyway, it's a great site if you want to kind of just put the information in and someone else will take care of filing it for you. There are other ones that are similar that I'm sure are just as fine. You can also, sometimes your accounting system or your payroll system will do it. So for example, if you use Gusto for paying people, they will file a 1099, I believe, on your behalf. I use Square to pay my individual contractors, and that they will issue a 1099 for me. I mean, I've got to go in and approve it, but they will issue it for me to the contractor and then send the 1096 to the IRS. So, sometimes you may already have a tool that actually does that for you. All right, so any questions on 1099s, feel free to let me know in the comments. Don't forget, we also have our Q&A session next week, so I'm happy to answer them there as well. All right, so I promised you I would tell you how I do my Q4 review. And I mentioned that what I typically do for my quarterly reviews is I will just basically add them on to when I'm already going to do a money meeting. With my Q4, because we're going to go more in depth and we're prepping for next year, I actually break it up. I break it up into about 6 or 7 days, and I tend to do these over the course of about 2 months. So, or maybe like 5 to 6 weeks, I should say. Because for me, I just don't, even though I love the money stuff, I love numbers, I don't want to just go in like head down for hours upon hours upon hours and focus on this stuff. So I break it up. You don't have to do it this way. This just works for me. So the way I do it is that first day, that's the financial cleanup day. That's when we're going into the accounting records. We're making sure everything's categorized correctly. We're making sure all the transactions, have synced in our system, making sure everything looks good there. The second day is where we're doing that financial review. This is where we're, excuse me, we're looking at what we've got going on for the rest of the year, make sure we're good there. We're also looking at the past year, get a sense for where there have been patterns of things we need to change, how did the year go, all of that, okay? The third day is when I do a current business assessment. So as I note here, I sometimes break this into 2 days, depending on, how many people I want involved in this and the complexity of the business. Now, this is not a specific financial assessment. I want to be clear here. So we didn't talk about this in this workshop. This is a general business assessment. We do look at the financials, but we also look at other things that, too, like where are our social media accounts at? Where are our, how many students in the course? How many students or people in the membership? How many people in our Facebook group? Where's our email list at? So, where is all that to our goals, and how can we fix that? We look at our systems and processes. What's working well? What's not working well? We look at our team. Do we need to bring anyone else on? So, like I said, generally that can take, that could potentially take 2 days, but that's more of a general business assessment. But it's really important to do before we move into the next step, which is the strategizing and goal setting. And that's that 4th day or maybe 5th day, where we're really getting into what are the financial goals going to be for the next year, and also what are the non-financial goals going to be. And again, that current business assessment has really informed, or really does inform what those goals end up being. So then the 5th day, so once we've got our goals, our financial goals in place, the 5th day we do our budget prep. So that's when and it does tend to take a little bit. We got to play around with the numbers. If I say I don't want to do coaching in the summer, we got to take that off and then figure out where we're going to make up that revenue. So that tends to take us a bit of time on that 5th day. The 6th day, we review our strategy and goals. We make adjustments as needed. So now that we've done the budget, so we set the goals, we do the budget. Now we come back to the goals and the strategy. Now that we've actually put pen to paper, we've mapped out the roadmap. Now we come back and say, do our goals make sense? Are they reasonable and doable? Does our strategy make sense? Do we need to adjust anything there? Because now we've created that roadmap. You may go create your roadmap and say, now that I put pen to paper, this is going to be tough, with all of our other competing priorities. So let's revisit our strategy and our goals. So we do that on day 6 if we need that day. And then the last day, we then go back to the budget again and make adjustments if we've changed anything on our strategy and goals end. Sometimes that 6th and 7th day I'll combine together. It really just depends on how much we've created from scratch. So for example, the first year of my business, creating a lot from scratch. Even the 2nd year, creating a lot from scratch, because I didn't really have a clue. I was still figuring things out. The strategy and goals review and the budget prep and review took a lot more time. Now that I have a much better sense of where my revenue comes from and what I expect to make, it's much easier for me to do those. So usually I'll do a budget prep one day, and then I'll kind of do a final review of both the strategy, the goals, and the budget on the 2nd day, because it goes a lot more quickly now that I have a better sense of my numbers. Cool? All right. I think that's actually it. I always forget. It's so funny. I make these slides, and I don't make them that far in advance. I literally finished this yesterday, but of course I'm sitting here going, I don't remember if there's anything else. There's not. That is it. So I'm going to leave it there. I don't see any questions from folks who are here live, so I'm not going to answer any. But just a reminder, we do, of course, always do the live Q&A sessions the week after, so it'll be next Wednesday at 4 p.m. Eastern. If you've got any questions, please bring it to that, or drop them here in the comments, and I will get to those questions as quickly as I can. But I hope this was helpful. Hope it's given you a bit of a checklist for things to do. Oh, one thing I did want to address, actually, before I go, that isn't specifically on these slides, is when do you actually do the Q4 financial kind of review? Because I think I already told you, for Q1, Q2, and Q3, typically when I'm doing those quarterly reviews, I'm going to do them at the next money meeting after the quarter ends. So Q1 ends March 31st. I'm going to do that review April 15th at the money meeting. Q2 ends June 30th. I'm going to do that review July 15th at my money meeting. Q3 ends September 30th. I'm going to do that review October 15th and at the money meeting. But with the Q4, because it's a bigger thing, typically what I'll do is I'll start at the beginning of Q4. So I'll start in October. So that first day, that financial cleanup, I'll do pretty early on in October. Now, it doesn't mean that we're not going to then have to come back and do like a quick financial cleanup when Q4 ends potentially, but by doing it at the beginning of October, I'm making sure that if there are any big issues that have been going on the whole year, I have plenty of time to deal with them. I'm doing it early enough. So I'll typically do that at the beginning of October. The financial review and the current business assessment, I'll tend to do kind of in the in sort of the like late October into mid-November period. And that's solely dependent on just everything else I have going on. I want to do it as late as possible so that I have as much data as possible, but I also don't want to do it too close to Thanksgiving or the holidays when people kind of start to tune out. So that's why I tend to like doing it late October into kind of early or mid-November at the latest. The strategies and goal setting and the budget prep and then that final review, me personally, I tend to like to do that in the beginning of December. And then I usually kind of let it sit. Like I'll kind of prep it the first or second week of December and then kind of let it sit and keep coming back to it and just kind of keep peeking at it and tweaking it and seeing what I like. And then I'll kind of finalize it really like right before the year starts. I like to do it at that point because that's really when I'm getting excited about the next year. I'm gearing up for the next year. I'm fully focused on the next year. But you don't have to wait until then to do it. And if you're newer to this, I actually probably wouldn't. I would probably get that budget. I'd probably start outlining your financial goals and get that budget started in late October or November, like right after you do that financial review and that current business assessment. Because I suspect for those of you who are newer to doing this, you're going to struggle a little bit with it. It's going to take you longer to do. You're going to want to come back a few times and tweak it. Whereas with me, I've been doing this now long enough that, like I said, it's not rocket science. I'm not building it from nothing. And so I have a general sense of where my numbers are anyway. And so I'm not having to do as much tweaking. And so I can push it to December because that still gives me plenty of time. But I would recommend probably starting that in November so that you have sufficient time to do those steps. Cool. All right, I am going to leave it there. Again, I hope this was helpful for you all. I will see you next week at the Q&A, and I hope you have a great night. Bye.